Hey y'all, huge shift to start the year for the stock market, January 2023. Ton of things going really ballistic to the upside, so a lot of traders are asking the same question. Is the decline over? Has the stock market long-term uptrend resumed, or is this just a bear trap that's going to lead to additional weakness? My name is Ryan with TrendLizard.com, and I want to provide some answers on that front, at least as far as the Elliott wave theory sees it. So we're going to take a look at a few of those super mega cap stocks that are leading this insane rally to the upside and see what their patterns have to say about it. See if they're looking trendy to the upside or what the deal is. We're going to take a look at Amazon. We're going to take a look at Google. We're going to take a look at Meta, and we're going to take a look at Tesla, some of the guys that have been leading the charge over the past 4 weeks or so. So we'll take a look at the Elliott wave pattern. The Elliott wave pattern seeks to determine where price action is in an ever-progressing price pattern. And if we can determine where it is in that price pattern, we can determine where it's going to go in the future. So that is the goal. Let's go ahead and dive into some charts and see what they have to say. All right, good people, let's go ahead and take a look at these charts. We're going to start with Amazon here, incepted back in 1997. It's obviously been in a massive uptrend over the course of its life. Back in 1997, had a really nice start, gave a huge chunk of that back, and then basically since 2001, it's been in this massive advance that has just trucked along. Things have changed in about mid-2020, things have flattened out. It's one of the largest periods it's spent not moving higher. If you look back here in 2004, 2005, 2006, it had this funky period here, a little bit of downside action here, but really this is one of the longest pullbacks we've seen in Amazon's history. So the way I have it labeled as this action here is wave 1, wave 2 to the downside into that 2001 low, and then everything to the upside since then being one large 5-wave advance, as shown in black, for that larger third wave shown in red. That means the pullback that we've seen since that 2020 high would be a larger fourth wave correction, which would make sense given its size. So let's go ahead and zoom in a little bit here. This takes a look just at this 5-wave advance here, basically wave 3, larger red wave 3, and it just shows the finer details. We know that every up leg within a trendy move should itself be a 5-wave move. There's a 5-wave move, so on and so forth. To give us that larger 5-wave move to the upside, it counts out very well. And within this advance off of that 2006 low, you can see this is the largest pullback that's happened. A move below 65 at any point may or may not happen, would be absolute proof that this up leg is over. But I'm pretty comfortable at this point saying that it is over and that a larger pullback has begun. So let's go ahead and look just at the pullback itself. This looks at it. It's been a pretty complex, pretty difficult move to figure out. You can see most of it was spent moving sideways near the high, which is clearly counter trend movement. This isn't the stuff of new trends. This is the stuff of counter trend or against the trend type price action. It became much more steep basically in 2022 and started breaking down. To me, it looks like a complex counter trend pullback. As you can see, I have it labeled here as a double correction, basically ABCX. ABC, with the potential that maybe a more important low was recorded at the start of 2023. We're starting to get some strong action to the upside. We've seen things happen that confirm that at the least this down leg here off of that 2020 or that mid 2022 high is over. So we can objectively expect something larger to the upside, at least for now. Now, if this recovery here that we're seeing is just a correction of this down leg, it would point to this yellow area here. So obviously there's some potential for growth still based on that projection. If instead this is going to correct all of this downside action that we've seen here, it would point up to this green area. So I mean, you're talking basically from 107 up to 147. Obviously not a super tight or super, fancy forecast we're making there, but the point I'm trying to make is that whatever's happening to the upside, it's pretty easy to make a case that it's going to get bigger before it's over. So it's impossible for us to say at this point if this entire down move is over. The potential is there, but it's a huge fourth wave that we're talking about. If we step back out here, huge fourth waves tend to be pretty complex, confusing moves. So it's hard to say for sure. What we can do is expect higher prices for now off of this low, kind of track the nature of this up move to determine what its intentions are and see where it goes. And again, if it's correcting this entire down leg here, it points higher. If it's just a correction of this down leg, we'd look for something in this area. How price reacts in this area will provide additional clues. Let's go ahead and zoom in on this action off of the 2023 low. It's been bullish so far. You can see that first up leg off of January's low is a very clear, trendy move. From there, it's been a counter trend pullback to the downside that tested the yellow Fibonacci support area, and then prices turned higher, just turned higher again this past week. This looks bullish so far. It looks like a setup for higher prices. As long as it's trading above 96 on this near-term time frame, we can expect higher prices. So that's what we're going to do. We'll see where it goes, and as it develops, we'll have a better idea. And as we look at the other stocks, they might provide some clues as to what we should expect here on Amazon as well. So there's Amazon. Let us move on and focus our efforts now on Google, Google, aka Alphabet. Here's that chart incepted back in 2004. It too has been in a major uprun, which is why it's a super mega cap stock, along with Amazon and the other ones we're going to take a look at. Had a very nice start, what we call wave 1, wave 2 down to the 2008-2009 low here, and has been just on a tear to the upside. This is the largest pullback we have seen since what happened off of the late 2009 low. This sideways action here looks like a second wave. This looks like the fourth wave of that same fifth wave advance, which again would be a 5-wave move for the larger third wave advance, right? This is 1 and 2. All of this would be wave 3 black. So we have our Google still in that third wave black, according to this labeling here, and you can see all the details of these up moves, all the trendy up legs play out in 5 waves as they should. So let's go ahead and take a step inward here. This takes a look just at this action off of the 2008 low, and provides much finer detail. If you want to study this, pause it, whatever. These are the 5-wave moves that we see. And again, it just kind of fleshes out how this was the largest pullback we've seen. All of this has been fairly direct. Obviously, the COVID crash was kind of nasty, but that looks like the inner fourth wave there. But this pullback is even worse than what we saw there. This has been a substantial down move, and it fits as a larger fourth wave, kind of like Amazon did as well. So let's go ahead and zoom in and look at this down leg. Now, here's the reason why we think that this pullback is not over, this fourth wave that we're in here, and why we think it's going to get bigger. If we take a look at the 2022 decline, excuse me, I have this thing off here a little bit. There we go. If we take a look at this 2022 decline, what we see is a 5-wave move to the downside, 1, 2, 3, 4, 5, pretty clear, pretty obvious. And then the recovery that it has undergone since November looks like a counter trend move. Went up, went back to test the low, now it's going up again. It's really going net sideways. And it certainly has the potential to get bigger, but when we're getting this type of sideways action after we see what looks like a 5-wave decline, I mean, we really only have one objective option here, and that's to expect a larger decline to form. Now, the recovery is likely to get bigger. If we look at what would be a Fibonacci retracement, and that means just basically a 38.2 to a 61.8% retracement of this down leg right here, it's this yellow area. That's a Fibonacci retracement area. That's what we call it. It makes sense when 5-wave moves to complete in one direction for price to retrace somewhere in that amount before it turns down. So the expectation very easily can be for a larger recovery to form. And then also from a time perspective, if you look at this decline, basically a year, maybe 11 months or so, this has only been a couple months to the upside. It's likely going to get bigger before it's fully corrected this down leg. But again, the problem is it looks like a correction. This looks like wave A. This would be wave B with another 5-wave decline for wave C at a later date. Who knows how big this gets first? Again, you can expect higher prices in the near term, even to the midterm potentially, as long as it's heading higher. But I think on any larger time frame, you just can't objectively consider this a long-term low. Let's go ahead and zoom in just on the recovery effort. And this takes a look at it. It was a nice up leg off of November's low, had a ton of potential. Unfortunately, that fizzled it with December and early January pullback when it nearly completely retraced this up leg. When you're in trends, you just don't see trendy up legs get this deeply retraced. It just doesn't work that way. So we have this recovery here. It looks like wave A, wave B, wave C. This is likely to head higher, but on any larger time frame, it's impossible to be bullish. We can only expect a larger near to midterm recovery before the overall pullback concludes, according to the Elliott wave theory. So there is Google. Next up is Meta, old Facebook, now Meta Platforms, META. Here is the chart. Incepted back in 2012, basically just trended upward, had a pullback in 2018, had a pullback in early 2020, largely has been in an uptrend until the 2021 high, and then got absolutely wrecked from there. So if we look at a retracement of every single bit of upward price action on Meta's chart. It was retraced by more than 61.8% by this decline in 2021-2022. So this is obviously the largest degree pullback we've ever seen. Whatever happened to the upside, clearly it was trendy, but whatever happened to the upside, it's over. This is reset it because this is such a big pullback. There's just simply no other way to look at it. So pretty much everything before that no longer matters to us because it's been retraced by more than 61.8%. So we know that this is just a large degree pullback. So let's go ahead and zoom in on this decline right here. And the problem with this decline is that it looks very much like a trendy 5-wave move, as you can see here. 1, 2, 3, 4, 5, pretty much jumps off the chart. Pretty hard to call it anything other than a trendy move unless you have some type of ulterior motive. And we never do. We never want to try to make the chart say anything that doesn't look obvious. We always want to look for the most obvious thing. And as we know, with the basics of the Elliott wave theory, when we're getting trendy, when we're getting 5-wave moves in a direction, that dictates the direction of the trend. So if it looks like trendy 5-wave movement, we're never trying to call it anything else. We want to call it what it looks like. So here's that 5-wave move. We've got a very nice recovery that's emerged off of November's low. And the good news is this recovery has retraced more than 61.8% of this last 5th wave down. That's a good sign. That's a good indication that this 5-wave decline is over and something larger to the upside has begun. Now, if we look at that same Fibonacci retracement kind of trick that we do, this yellow area here says a retracement of this 5-wave decline here should take us up to this yellow area, 200 to 270, thereabouts. And again, the time factor, you look at this thing, lasted what, 16 months maybe? This has been 3 months so far. Seems like it's going to grow to the upside. So the potential is certainly there for additional strength on the shorter time frames. On the larger time frames, we have pretty clear indications that this is a larger degree move that is not over, because you don't just get a single 5-wave move. This would have to be wave A of a larger ABC or wave 1 of a larger long-term downtrend. Whatever the case may be, you're not going to get just a single 5-wave decline. So again, kind of like what we looked at with Google, you got to think we're in a larger recovery that will continue to grow in the coming months as it retraces a larger portion of this down leg. But on any larger time frame, we still have to think that the downtrend is not over. Let's go ahead and zoom in just on the recovery effort. This takes a look at it. It's been great. We've traded this with our professional and trader plus services at TrendLizard.com because it's a beautiful setup. You had a nice 5-wave advance. You had a 3-wave pullback. Sets up higher prices. That's exactly what's happened. Prices taken off to the upside in the next up leg. Obviously, the overall recovery so far is a 3-wave move. As long as it's trading above 127, higher prices will be expected straight away. And we'll see how it shapes up. I mean, that's the thing about counter trend moves. They can take a bunch of different forms, and that's why they are harder moves to trade. But in a scenario like this, when we're looking at larger degree recovery efforts that give us reason to expect higher prices, then we will try to trade them. But we don't know exactly what form this will take. I mean, potentially it could be an ABC move and then come back and then go up and do all this funky, difficult to track type business. But as is, everything has been trendy and strong off the low, and we'll see how long it plays out. Again, we're looking for it to move into this yellow area over the coming months. Should last more months before price turns down and gives us another 5-wave decline. So Meta in the books. Let us take a look at Tesla, TSLA. Everybody knows this guy, always in the news. We've been tracking this guy so many times. We have a ton of videos on there. And since that time, this has been generally our labeling. Things have shifted lately, and we'll take a look at that. But what we've had off the 2010 low is what looks like a 5-wave up move. ABC pullback, retraced a Fibonacci portion of that 5-wave up leg. And then we have another beautiful, massive 5-wave up leg into the late 2021 high. Since then, a very large pullback has emerged. It retraced more than a Fibonacci portion of this up leg here, so that's a concern. We would not expect that if this was just a correction of this up leg here. So for a long time, what we're calling this was a first, a second wave, a third, and a fourth. It no longer really looks like a fourth wave. It's such a deep retracement. It just doesn't make a lot of sense to call it a fourth wave. Another consideration would be that we're not seeing the entire pattern here. All we're seeing is the latter end of it. Just because Tesla was incepted in 2010 as a stock doesn't mean this is the very beginning of its first wave of some larger pattern. We're just kind of dropping in on the pattern wherever that was incepted. So that would be wave 3, wave 4, and wave 5. And therefore, this is a much larger degree move. Obviously, the largest degree move we have ever seen on Tesla. And here's another way to look at that. If we change this just to a linear scale, just for dramatization purposes, I guess, and take a look at this, every little bit of upside action we've seen since its inception, this guy has retraced more than 61.8% of it. It's retraced more than that, so how can we really call this anything other than the largest degree move we've ever seen? Now, there is good news. It's not all bad news. Obviously, it's been absolutely destroyed, cut down by like 75% from 400 to 100. But as is, this continues to look like a counter trend move to the downside. There's all this choppy, funky business here, and more in a general sense, it looks like a three-wave decline at this point. So let's go ahead and zoom in on that. This looks at the most recent 5-wave up leg, basically just this thing right here. And then its completion, and then you can see the pullback off of that 2021 high. Looks like a 3-wave move so far, and you get all this funky, choppy business at the beginning. Whatever the case may be, no matter how you label this, no one can tell you this is a completed 5-wave down leg, which is a good thing. If it continues to move upward, it's going to be left as a counter trend move, and that's a pretty bullish thing, obviously, because again, it got cut in half by by 75%. And if this all proves to be a counter trend move, it means it's going to recover that. And that's like a 400% return and then continue from there. So on that front, there's some bullish things. We don't want to get too far ahead, but I mean, there's a lot of potential here. So let's go ahead and zoom in just on this pullback here. It's a difficult move. Looks like a complex down move to me. That's the best way I can find to label it. But you see at the start here, ABC to the downside, and then it recovered. That very much looks like counter trend action. But on the larger scale, we have wave A, B, C, and then maybe X, A, B, C. So it's possible that it's completed. It's possible that this is the resumption of a much larger up move, but it's hard to say yet. I mean, basically all we have is the straight shot up leg. It had a massive week this past week, I think up 34% or something crazy like that. But at the end of the day, this is a very straight line move. And a low being in is based on this funky labeling right here. Like, okay, it's possible, but I mean, how much weight can we put into it and say, absolutely, clearly this is over? You can't say it yet until you have some level of proof. Certainly you can dabble in this guy and have an exposure to it, but I don't know that you could be super aggressive until you see this thing take on a clear trendy 5-wave form and then be corrected by a counter trend pullback. That's kind of your indication, okay, that this is really actually something very different, not just the latest swing in what's been just a crazy ride for Tesla and Elon in general. But at the end of the day, a move above 240, which is way far away still, would be very bullish and would make a very strong statement that this is a very strong suggestion anyway that this entire pullback is over. And meanwhile, price has to stay above 132 to maintain that potential. Now, it does not look like it's given us a 5-wave move yet. Whatever the case may be, we like to see larger counter trend pullbacks to solidify new moves, especially with a guy that moves this quick. And you're like, well, how long can we wait? It's already up basically 80% in like 2 weeks. True. So if you get a correction of that, you're talking about huge chunks to the downside, or say that it's a false move. You're talking about huge losses just because you're taking a stab at something that is yet to be confirmed. So you got to be careful with that. Bottom line is you need some kind of proof. Sometimes the market makes it very difficult to provide proof just because that's how the market works. But at the end of the day, you just need proof before you see a massive decline like this and conclude that it's over based on a complex downward correction. So there is a look at 4 of the super mega cap stocks that are leading this insane recovery in 2023. Certainly potential, certainly reasons to think that it could continue in the near and even midterm over the next several months as larger recoveries play out. But what we're seeing on most places are good reasons to think that this is not a long-term low. We'll see about Tesla. Tesla can kind of march to its own drum. But I think for most things, this looks like what we would consider a larger B-wave recovery within an incomplete ABC decline. So hopefully this stuff interests you. If you want to learn more about Elliott wave theory or see this stuff work in real time on pretty much every major instrument out there. We cover like 80 instruments at TrendLizard.com, from ETFs, so like oil, currencies, precious metals, all the major sectors, as well as individual stocks and some crypto as well. So come visit us, free trial, all that good stuff. Have a good one. We'll talk to you again very soon. Take care.